Hey, and welcome to this session of Free Tax Tips. So on this one, we're going to talk about how to avoid getting audited. That's a good one. How to avoid getting audited. First thing I want to advise everyone to do is stay within their figures of comfort. What are you saying, tax guy? What I'm saying is, some people spend money, cash transactions especially, and don't keep a good record of what they spent money on. It happens often. So let's just assume that you spent money on something. You don't really know exactly how much it was, but you know you spent money on, let's say, computer equipment. But what did you buy? You brought a laptop, you brought a new printer. About how much was that? Stay within the level of comfort. If it was $2,000, put $2,000. Don't put down $5,000. Now, IRS is going to say they want you to have documentation and proof for what it is that you're taking as a deduction. So for that reason, I always recommend that you write checks or use a card. I call it write or swipe. Write or swipe. That way you create a paper trail that you can later go back to and try and look at and use that for your documentation as far as the support for the computer equipment that you purchased. Now, let's say you got a hookup on something and it was $400 you paid cash. Again, you want to stay within the realm of what it is that you think is comfortable as far as your write-offs go. Don't overestimate things when it comes to your taxes. A lot of people run into problems. One, when they don't keep good records. I wrote an article, it's on our website, about keeping good records. And when it comes to keeping good records, you use good record keeping by swiping and writing. Because you have a paper trail to follow, it helps you to keep an accurate record of what it is you spent money on. When you use cash, it's a little harder. It's not as easy to track. So you have to go back and kind of trace your steps of what you spent money on. Now, there are ways to go about getting receipts or creating receipts for things that you spent cash on after the fact. But at the same time, you have to stay within your level of comfort. One thing I do want to say is this. When you get audited, it's not the end of the world. People get audited. It's very similar to, I don't know, people go to the hospital. I mean, more people go home and get discharged than, end up passing away if they go to the hospital. It's one of those things that do happen with the territory. The IRS does audit people. Let me give you some experience here from things that I've experienced. Let me tell you something from things that I've experienced, I should say. When it comes to audits, I've seen it work one of two ways. Number one, I've been with a client and we've gone through the audit. He presented the material that he had. He found some extra receipts. And the IRS had to write him a check after the audit. True story. The flip side of that is I've been in audits and the person, the taxpayer, couldn't find very many receipts to prove what it is that they needed to show proof for. And for that reason, they ended up on the IRS several $1,000s. So just because you're getting audited, it's not the end of the world. The key thing with getting audited is to be able to go back and find that paper trail that you spent money on to show support for your documentation. And for that reason, I like to recommend, again, swipe and write. Swipe and write. Swipe your card, write checks as much as possible. Limit the cash transactions. That's one of the best ways to avoid getting audited and not having the proof to be able to show what you took a deduction for. Is there a 100% full way of not getting audited? No such thing. It's always a possibility. So for that reason, do the best you can to stay within your comfort zone and taking your deductions with what it is that you spent money on that you're comfortable with. Hey, if you found this video to be helpful, be sure to like us. You can also subscribe to us. Again, this is Free Tax Tips. Take care. We'll catch you next time.